in chapter 22, we are going to talk about the statement of cash flows. Now, there are two ways to do the statement of cash flows. There's the direct method and the indirect method. And FASB actually suggests that we do it by the direct method, but still over 90% of companies use the indirect method. You should get the same answer regardless of which way you prepare it. And, honestly, the information is there if you want to prepare it the other way. The information is in the financial statements and the footnotes to do it either way. So on brief exercise 22-5, we're going to do the operating section. And this is, let's see, this is on page 1359 of your book. It starts there and then moves over to 1360 on that. And so we're going to do on 22-5, we're going to do the direct method. Now, when we talk about direct or indirect method, if you'll remember in the cash flow statement, there are three sections to a cash flow statement. There's the operating section, the investing section, and the financing section of the cash flow statement. And regardless of whether we're doing the direct or indirect method, the financing and the investment section are both done the direct method, regardless of which way. So when we talk about direct or indirect method, we're really only talking about the operating section and how that one is prepared. Okay, so we have a comparative balance sheet here for Larry's Luggage Company, and then we have a single income statement for the year over on the next page. And to do the direct method, there'll be a number of lines that we have to create. So I'm going to leave a little bit of space at the top for that. And the first thing we have to do is we have to get the cash collected from customers. And to do that with the direct method, we will we'll take our sales, and that's given to us on the income statement over here as $56,000. And then we have to look at the accounts receivable. Now that's going to be on the balance sheet. And the accounts receivable, the beginning accounts receivable was $3,000, and the ending accounts receivable was $5,500. So that means that we sold more than we actually collected. So we collected $2,500 less than we actually sold. So we have an increase in accounts receivable means a decrease in cash. So we'll less the increase. And that's true of any activity. Any increase in assets will be a decrease in cash. And that was $2,500 for that. And that gives us our cash collected from customers of $53,500. So we'll go up here and say cash collected from customers. And that was $53,500. All right. The next thing that we have to do is the cash that we pay for our merchandise. And so we're going to start that with our cost of goods sold. And that's going to be, that comes off of our income statement is $33,600. And then we have to look at our inventory. Okay, so our merchandise inventory, we started at 1,800 and we ended at 4,000. So that would be an increase of 2,200. So we add the increase in inventory. That. And so that's going to give us our actual purchases here. So that will be 35,600. I'm sorry, 35,800. 35,800. Now we have to look at our accounts payable. Accounts payables over in the liability section. It was 4,400. It's now 3,200. So we've actually paid off more than we purchased. And so that will be a $1,200 difference. So we will add the decrease. In cash paid for merchandise of 1,200. That will give us 37,000. So cash paid for merchandise. And of course, that is a negative. All right. The next thing that we have is the cash that's paid to suppliers. I'm going to scoot this up a little bit so you can see that. The cash paid to suppliers. So we go down to the income statement. Selling, general, and administrative expenses were 11,600. All right, to that we have our prepaid expenses. Now, prepaid expenses are actually an asset over here. So I don't see any over there. On that. And the next one is the increase in accrued expenses. Accrued expenses, we were at 6,550 and we're now at 6,700. So that would be an increase of $150. So we would less the increase in accrued expenses, 150, and we should be done. All right, so we add those together and we get 11,450. Go back up here. Cash paid to suppliers. $11,450, and that will be a negative. The next up is the amount of cash that we paid for interest. And that should just be one line. Our interest expense, 2,100 on the income statement. We also will have investment income received. Investment income was 634 off the income statement. So that should have been a negative. Now the investment income is a positive. That came in. And then the last thing that we will have to worry about is the income taxes. So if we look on our statement, we have income tax expense. And the income statement lists that as 1,334. And then we have to go look at our balance sheet for the income taxes payable. We were at 2,450. We're now at 1,500. So that means we paid an additional 950. So that's a decrease in taxes payable. 950. Add that together, we get 2,284. And so taxes paid. $2,284. That will be a negative. And then we add that all up, and we should get a total of $1,300 cash from operating activities. Now remember, this is only the operating section of the income statement. This is not the full cash flow statement. This is just the operating section. So go ahead. Let you take a look at that. Everything there. That will give you your total amount. All right. So that concludes brief exercise 22-5. And quite frankly, that's as complicated as we will get on an exam, something like that.